Hi guys, I'm Phil Town for Rule 1 Investing. We're going to talk a little bit about options here. Now, options can be a gamble, but they can also be an investment. And we do options trading so that we do trading and we do it so that it's an investment. And we do it using the same terminology in either case. So when we look at an options trade, we understand that you can either be the house or you can be the gambler. Now, if you're the house, then you are going to be collecting the money. If you're the gambler, you're going to be paying the money to play. So we have a couple of terminologies here I want you to learn. The first one is, if you are going to buy an option, we're going to use terminology called buy to open. And if you're going to sell an option, we use terminology called sell to open. What that tells us is you're going to open the trade and get into this either from the house side or the gambler side. Now, these are a little bit oversimplified, but just understand that if you're selling options, selling to open, or STO, that you're like the house, right? You're saying, come and sit down at my table, pay me some money, and let's roll the dice. And if you're buying options, you're basically saying, okay, I'm going to come and sit down at the table, and here's my money on the table. So when you sell an option, you collect money, and you incur an obligation. And when you buy an option, you pay money and you buy a right to something. Now, it just depends on whether you're doing a put option or a call option as to what you're obligated to do and what you have a right for. Now, when we talk about buy to open, we've talked about opening the trade. Let's talk about the other side of this for a second. What do you do to get out of this thing? Well, if you are the gambler side of this and you bought to open, then you are going to do the opposite to close. You are going to sell to close. So BTO, STC, buy to open, sell to close. So I bought to open and I paid out money. Now I'm going to sell to close and hopefully I'm going to collect more money than I paid out. Now when we sell to open, then we're going to do the opposite when we get out of this, because now we're going to exit this particular situation. We sold it to open and we collected money. So in order to close it, we are going to buy to close and pay money to clear it out. Now, how do we use BTC and STC? How does this relate to Rule 1 investing? Well, the main way we use this is we find a company that we want to buy. We realize we can't get it at the price we want to pay because the price is too high right now. And we sell an option that says, please send me this stock someday if the price ever gets that low, and I'll buy it from you at that price. So what we're obligated to do is buy the stock at that price. So we STO'd, we sold to open, and now we're obligated to buy the stock at this wonderful price we want to pay. In order to exit that trade, we are going to buy to close. We sold to open, now we're going to buy to close and get out. Now we do that a lot. And the reason we do it a lot is because, let's say Apple Computer is selling for, I don't know, $100. And we would like to buy it for, let's say $80. We could sell an option that says, I will be happy to be obligated to buy Apple Computer from you at $80 for the next year. And you'll pay me, let's say, $5 to do that. Sweet, I collect the $5. Now, if the stock price of Apple Computer goes up to 120 over the next year, then it's less and less likely that it will go down to 80. It's going the opposite direction. And the farther it gets away from 80, the less money somebody's willing to pay to have this right to be able to sell it off at 80 bucks a share. So what happens is that $5 premium that I collected goes down farther, and a year later, it's down to, let's say, 50 cents. Well, if I want to close out my trade, all I have to do is buy to close, buy that back for 50 cents, and I've eliminated my situation. I no longer am obligated to buy the stock for 80 bucks. And what I've done is just collect $4.50 profit. So we use these concepts of buy to open, sell to close, sell to open, buy to close, to create cash flow in Rule 1 investing. Now, I know what I just told you is going to be a little over your head, but understand something. normal people, just guys like you and me, figure out how to do this all the time and use it just like Buffett does to increase cash flow, get reduction of basis, and put ourselves in a safer situation when we're buying great companies. That's what we do with Rule 1 options, and that's why we use something like buy to close or sell to close. It closes out the trade, puts the money in your pocket, reduces your basis. So if you like what you've heard here, subscribe to this channel for more content. There's a lot more to learn about how these great investors make millions of dollars. I'm Phil Town, and it's time to go play.